I think the bar was set incredibly high when you have Stanley Druckenmiller, when you have David Tepper coming on TV and talking about how investable China is. The fact that the stimulus didn't quite live up to the expectations yet is what set up today's disappointment. But look, the world's second largest economy that's underinvested elsewhere cannot be ignored. 5% growth, that's their target. I think they're going to get there. Stabilizing their real estate by any means necessary, that'll get them there. Monetary stimulus, I think it's a great setup for higher dividend paying names in the regions, utilities, telecoms, energy, and financials.
Monetary stimulus, but Jason, I mean, in China's case, consumption is the problem, right? Folks are just not spending or investing. And, you know, no matter how much stimulus you throw out there, no matter how cheap you make credit or freely available, if there's no demand, it's like pushing on a string.
This is true, and there are other challenges. The counter tariffs are another challenge, not to mention geopolitics and who's taking what side. But nonetheless, in my 30-year career, I've never seen them take out the bazooka in terms of stimulus like they've announced the other day. So I do think that given how underinvested, in spite of the rally, how valuations, historically speaking, are cheap there, there's still room for a run in the securities there.
Jason, do you want to be exposed then to those names, the NMNCs that have exposure to China, Apple, to Tesla, if the macro is looking sounder there, given the stimulus? And is this going to be a factor that shows up in the guidance with Q3 earnings, more positive on China?
For sure. Look, the macro backdrop there is improving. Here, stateside is improving. So companies that have boots on the ground there, that have wore the black eye, so to speak, for quarters after quarter of meager growth, I do also think stand to benefit.